to view the short-term cash positions and as well as short-term incoming and outgoing purpose, we are going to use the cash and liquidity management. Okay, but now we need to understand why they have differentiated cash management and liquidity management. So let us discuss cash management. Okay, so what is the purpose of the cash management? Okay, without understanding the purpose, then we cannot move forward. Okay, now the cash management is part of FSCM, financial supply chain management. Okay, then the cash management, the purpose of the purpose of the the purpose of the purpose of the cash management, the purpose of the cash management is to verify, is to check. Okay, is to check cash positions, cash positions cash positions of all the bank accounts, bank and cash accounts. Bank, I will mention here, bank or cash accounts. Now this is the purpose of. Okay, now the purpose of the cash management. Okay, the purpose of the cash management is to check cash position of all the bank accounts, cash and bank accounts. Now if we are going to execute the transaction code FF7AN or FF7AB, now there will be two options will be appear, whether we would like to see the cash position or it's a liquidity position. Okay, now if you want to view the only the cash position, the purpose of the cash position, okay, the purpose of the cash management, it is going to view the how much the cash or how much money is available in our cash or bank accounts. Okay, for that is the purpose cash management, okay, is being given. Okay, now if we talk about the liquidity management, what is the purpose of the liquidity management? Now we have discussed about the, okay, cash management. Now the liquidity management also, it is part of the FSCM only. It is sub component in financial supply chain management. Then the purpose of liquidity management the purpose of liquidity management is used to check the or verify, is used to check the liquidity position of the, okay, subledgers in the sense, okay, either it's like a subledgers, I'll mention here, accounts payable, accounts receivable. Okay, so when we want to view, okay, when we would like to view the, okay, the liquidity management, see, cash management, the management would like to know how much money which is lying in our bank accounts. That is for cash management. The liquidity management is that now if you are going to view the liquidity position, means how much the incoming, how much money which we are going to receive from the customer by end of the November. Okay, how much money we have to make payment to the vendors. Okay, is there any apart from these two things? Okay, apart from, are there any, okay, it is additional commitments which organization do, which organization perform? Okay, either it's a payments or receivables. Okay, now if they are going to view this report, the management will come to know the shorter view of the cash position. Okay, now let us assume, we have a 10 lakhs rupees cash in our bank, cash and bank accounts now, and also at the same time they have also viewed, the management viewed the report, liquidity report. Now the incoming amount, okay, which is a 5 lakhs rupees, but the payables, okay, payables amount would be a 20 lakhs rupees. Okay, I will give a small example here. Anyhow, I'm going to give the one more example. Let us assume my cash and bank accounts have the, okay, let me assume 10 lakhs rupees is a balance. Then accounts receivables, we have a around 5 lakhs rupees, the balance would be. Now the AR, let us assume accounts, AP, accounts payable, let us assume we have the amount, okay, we the payables, it's a 20 lakhs rupees. Okay, now you can see here the deficient amount is a 5 lakhs rupees, means the 5 lakhs rupees which is not available, means sufficient amounts, sufficient funds which are not available in with our organization. So that is the reason the management will arrange the sufficient funds in order to overcome this situation. For this purpose, we have a concept, cash and liquidity management. Okay, now I will explain you. Now this is a small example I have given. Anyhow, what kind of limits the organization has given, that I will explain you. Okay, that is the important one. Okay, then we have a two types of in the cash management and liquidity management. Okay, we have a two types of limits will be there. One is a fund based limit, another one is a non fund based limits will be there. Then okay, so far what I have explained, cash management and a liquidity management. So if is it clear for you, or if anyone is having any query, so please let me know.
Vijay Venkat here.
Yeah,
So
Venkat.
by getting this, what is our cash and what is either from AP or AR, we will get to know by using the P&L account, P&L, my profit and loss account, right? So how it is different from that we are using for the cash management?
See, the cash management, we are going to create the planning levels. Okay, for which level we are doing planning? Let us assume I am doing a planning at bank accounts level. Okay,
Mm-hmm.
all the bank accounts I am going to assign the planning level. Okay, in the bank GL accounts. Okay, the planning groups which I am doing for the, I mean, which I am going to assign into the my account, my vendor and customer master data. So based on that, the system will derive the report. Okay, now you are talking about P&L account, profit and loss account. Either see, for we are assigning this separate. This configuration is separate. Okay, it's not at all relevant for your P&L account. Okay, if you view the P&L account, what you will come to know, expenses and revenues only you can able to view. But if you want to view the cash position, means again it is a current asset. Cash position, again it will move to the balance sheet, right?
Mm-hmm.
Okay,
Correct,
so
correct.
okay, so in that way you I think going forward you will understand, Venkat. Okay, the planning levels, planning groups, or it will play the key role, Venkat. Okay,
Got it, got
so
it. Thank
okay,
you.
no problem, Venkat. Yeah. Fine. Now we have a two types of limits are there. Means one is a fund based limit, another one is a non fund based limit. Okay, so fund based limit in the sense where the banks are going to give. Let us assume now the banks has given some overdraft limit to our organization. Okay, we can utilize that overdraft limit. Okay, that we are going to call it as a fund based limit. I am just giving an example, but with example I will explain you. Now if we talk about a non-fund based limit, the banks are financial institutions, they are not going to offer directly to utilize the money. Okay, to utilize the money, instead of giving the cash limit, what they are going to do, they will give the some indirect support, like